Welcome, G3 investors and patrons. We're going to take a look at week one in January 2022. The stocks closed lower on Friday after a disappointing jobs report. I think the number of jobs was 199,000 versus the 440,000 that was projected. The NASDAQ lost 1%, the Russell was down 1.2% for the day, and the S&P was off minus 0.4. For the week, the NASDAQ was down minus 4.5, the S&P down 1.9, and the Russell was down 2.9%. The NYSE and the Dow Jones were flat. The whole week was about Fed and interest rate fears. The Fed cut back on their bond buying program and interest rate fears. And that's, combined with inflation, has put a real fear in the market. We've been in an uptrend since October 14th, but that is kind of in limbo right now. I still think we're in the uptrend, but we're getting really close. The model had a really good week. We gained 11,000 or 2.9% on our initial capital of 386,000, 4.7% better than the S&P 500 and 7.4% better than the NASDAQ. So we continued to beat the crap out of the market. And since we started this model from its inception, we're up almost 300%. And had we calculated our gain based on our initial starting capital, we'd had 11.1% gain. All right, so let's take a look at what's strong in the market. That's what I like to do, and that's what I'm going to do. All right, well, by my calculations of the 25 ETFs that we follow, only 5 are really strong, or what I consider strong ETFs. These are ETFs that have made new all-time highs. Like right here, we're looking at the XLF, which is the financial sector, and you can see we have a position in it at 40.90, and it took off, and it is in great shape here. Made a new all-time high on Friday. Again, I didn't update it, but it looks like that high would be 41.27. I've got it set at 41.24, so I haven't got that incorrect. The next one I want to look at is and we have a position in that one, and our next one is XLE. Whoops, wrong typing there. XLE. This is the energy sector. Again, we have a position in it, and it's a very strong sector. You can see we're off to the races here. I think we got stopped out or took profits earlier, and then we got right back in at $61 a share on that one. We don't have a position in XLI because we got stopped out, but it made a new all-time high here, and it is looking pretty good. That's a very bullish flag, so that looks like it wants to go up, and there is a rotation in the marketplace. I should talk about that too. I mean, the financials, industrials, and then materials, which is XLB, which again made a new all-time high. We got stopped out of that one again. We would get back in at 91, but it's still looking pretty good. It's above both its 20-day, the blue line, and its 50-day. So it's looking pretty good. And what I think is an important ETF is the transports, IYT. Again, we got stopped out of that. We had a nice gain here. It didn't make a new all-time high, but it's close. It's within a couple points of it, But it pulled back here, and that's really a bullish-looking flag to me. So it's holding up a very strong ETF. Now I got 2 more that I think are holding up pretty nicely. One is aerospace and defense. You can see the blue line had, went negative against the red line here, or the 20-day went lower than the 50-day, but it's coming back up, and we gapped above that, on this double, and that's for those who are chartists, we're not chartists, but that is a double bottom or a W formation, and so we're participating, or we're going to participate in that breakout, and we're in the ETF and then got stopped out on this bar here, and we'll get back in at 107. Okay, the last one that I think is holding up pretty well, and the only reason why I still think we're not in correction mode, we're just in a pullback mode, is the S&P. Again, it pulled back and it's sitting right on its 50-day moving average. Okay, so this looks like a little bit of weakness. I'm still saying it's holding up. It went down here below for a day, and there's a day, and now it's sitting right at the 50-day moving average. Another thing I want to point out, so that's 7 ETFs that are strong or holding up. Now we've got 15 ETFs that are weak. Now I'm not going to look at all of them, but I'm going to look at some that were strong just a month ago, like the semiconductor index. So what happened here? Okay, well, the tech shares, because of the inflation fears and the interest rate hike, the tech stocks are the ones that are taking it on the chin. And we'll look at that in a little detail here in a little bit. But you can see that this is a pretty solid breakdown here. So we would get in it if it went back up to 308, and it doesn't have that far to go. And we made a lot of money on the semiconductor index last year, but that is a weak one. Here's another one that made a new all-time high this year. Okay, or I mean, this in the past 30 days. Sorry about that. And here it is down below its 50-day moving average. And its blue line there has actually turned down towards the red line. So this is actually a triple bottom here. And if it doesn't hold this level, it could go substantially lower. Another ETF that made new highs, fresh highs in the last 30 days is the healthcare sector. And look at this one. I mean, it made a new high right there on December 30th, and we're fading fast, and pretty high volume over here for that to happen. And the last one that I want to look at is XHB before I look at some of the indexes. Again, made a new all-time high back here in the middle of December on the 13th, and look at where we're at now. The last one is the QQQ, which is the NASDAQ 100 Trust Series. Again, it didn't make a new high in the last 30 days. You have to go back to November 22nd. But that is a pretty bad breakdown. And again, we got this triple bottom here. So if this goes much lower, I can only say one thing: look out below. Now finally, let's take a look at the heat map before we go here. So this is a 1-week performance of the S&P 500, so we can take a look here at what got hurt and what is really rocking this market. And you can see right away it's the banks or the financials. Okay, the regional banks are also doing good, but look at that. That's XLF right there. That looks pretty strong. And there's the energy sector, also looking very strong. Now, we don't trade telecom services, okay, as a sector, but we can see what took it on the chin here was the FANG man stocks: Facebook, Amazon, Microsoft, Netflix, NVIDIA, Google, and Tesla. We call it FANG man T. So that's what took it on the chin. It'll be interesting to see how we do next week, and earnings the week after that will start coming out for the end of the last quarter. So it'll be very interesting. This is Greg Gallagher with G3 Investors saying good trading and good luck.